Welcome to the weekly macro roundup. I am Michael Ogunremi, CFA. In the United States, 4 Federal Reserve officials expressed conflicting views on interest rates last Friday. The presidents of 3 regional Fed banks, including the Chicago Fed, emphasized inflation risks, while the Philadelphia Fed president expressed greater concern about a weak labor market. The economy added 64,000 jobs, above consensus expectations, after the massive drop in October, and the UR ticked up to a 4-year high of 4.6%. But, again, caveats abound, as the 43-day government shutdown forced the BLS to alter its methodology for this calculation. U.S. corporate finance chiefs continue to cite tariffs as a top concern and, on average, see prices rising more than 4% next year, according to a survey released on Wednesday. The University of Michigan's final December sentiment index climbed 1.9 points to 52.9. While the median estimate in a Bloomberg survey of economists called for a reading of 53.5. The core CPI rose 2.6% in November, the slowest pace since 2021. In China, investors are increasingly favoring yuan credits, with surging yuan lending poised to overtake overseas dollar loans at Chinese banks, supporting the push to globalize the currency. However, China's economic slowdown continues, and growth is expected to be around 5% in 2025. Expanding domestic demand is the top priority for next year. Moving to Europe, the ECB expects inflation to remain near its 2% target, with any interest rate moves dependent on the economy. German business confidence dipped in December, but industrial production unexpectedly rose in October, supporting expected growth in the final quarter. The EU also agreed to lend Ukraine 90 billion euros over the next 2 years. Canada is experiencing, quote, ultra-low fertility and a record drop in non-permanent residents, leading to a population decline in Q3. Retail sales rebounded 1.2% in November after an October decline, showing resilient consumer spending. Toronto's condo market is grappling with a surplus of unsold units, pushing a record number of developers into insolvency. In the United Kingdom, consumer confidence edged up in December, reaching its joint highest level for the year. Unemployment climbed to a near 5-year high of 5.1%, and wage growth eased. Inflation dropped to 3.2% in November, below expectations. The Bank of England cut rates, but warned of limited room to ease in 2026. In Japan, the BOJ raised short-term interest rates to 0.75%, the first increase since January. However, the yen continues to struggle. The government also agreed to raise the annual income tax threshold, a revision that will benefit approximately 80% of all taxpayers. For our top 5 developments, the U.S. labor market is cooling. The Bank of Japan's rate hike strengthens policy divergence. China faces weakening growth and renewed yuan concerns. ECB policy signals remain conflicted, and North American trade uncertainty persists due to tariffs. Next week, focus will be on the U.S. Q3 GDP and PCE price index updates.